Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, October 13th at about 12:45 p.m. Eastern. Well, Wall Street's main stock indexes gained at the open today on the upbeat earnings of big U.S. banks, fueled optimism about the state of the economy, while Treasury yields eased following a spike in the previous session. That would be Thursday. J.P. Morgan Chase, Wells Fargo, and Citigroup rose between 3 and 5% after trouncing quarterly profit estimates as they benefited from higher interest rates. As I talk to you right now, however, again at about 12:45 p.m. Eastern, the Dow is positive, but the S&P 500 and the NASDAQ have turned negative. And on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to first look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our S&P 500 index. Now today, if you look with me over here on the far right edge of the chart, when I captured this chart, the SPY was trading at $432.96, sitting right on top of the red line, the 20-day moving average, which is coming in at 431.21. So you can see that the at the moment anyway, the 20-day moving average is holding up today's candle, and it is trading below the 50-day moving average, which is coming in at 439.47. The SPY is currently trading at 10% below its all-time highs of $479.98 back in January of 2022. Now, we all know that if we look back in this year, you can see April and on this chart at the far left edge, we all know that we had a pretty darn good uptrend for most of the year, coming right into the July 27th. That's the day that the SPY and almost everything else gapped open and then fell. And that it gapped open and made an intraday high here at $459.44. Then it started falling from there, so we'll call it a relative high because the highs before and after it are lower than it. So that is our current relative and recent high. Again at 459.44. From there, it dropped back down below the 20-day moving average, below the 50-day moving average, and came down here to the low on August 18th. It gapped down to $433.37. Now from there it rallied. It made a nice rally up here to the September 1st high of 453.67. Now, if you look left on the chart with me, you'll see how important that 453 was. That is in July when we had this gap here. That was the opening day at that at that level at about 453. So this is now becoming a more important level. Depending on which side of it the SPY is on, whether it's resistance, which would be current, or support if the SPY were above it. So we watch these levels because they seem to make a difference sometimes. So we have here, it went up to the September high. Let's go back over here. The September high of 453.67 on September 7th. Then fell to about 444, fell back below the 50-day and the 20-day, but kind of stopped right here, then pushed back up to 451, then dropped hard from there. And then from there, it just rolled over below the 50-day, the 20-day moving average, and fell pretty hard down here to the 200-day moving average. And then it sidestepped for a few days right at 420, 421. This is an important level for it to hold. Now, this is a week ago today. This is the past Friday. We had that positive day that certainly was refreshing and bullish. But and price did start moving up, but in light of everything that's going on, the positive mood and manner in the market gradually slowed this rally down this week. So it got over the 20-day, couldn't make it over the 50-day, and it's made a pivot high so far at about 437, and then falling down again to where it is now, right now, as I said, down at 432.96. So, and if you look left on the chart, you're going to see that in September, it's close to the gap here, to this gap high, or a low part of the gap. So you see where it got up to that point again, just a little higher. This was at 436, and this is again at 437. But these things count a lot of times. So at any rate, again, we know where we are right now at 432.96. So looking at the short term here, we're going into earnings season. We have, as you know, a lot going on in this world. We want the SPY to stay above the 200-day moving average. That's my goal. Being bullish, I want the SPY to stay above the 200-day moving average, which is coming in right now at $421.08. Call it 421. This 420, 421 zone right here, this level is very important. Now we have nearby resistance here at 436 right here to 439, up where the 50-day moving average is coming in overhead. If you want some good news, and I've certainly been looking for some, remember that November, December, and January are seasonally the 3 most positive months of the year. So we will hope that that holds true this year. And now let's move on. Our next chart today is the chart of the Invesco QQQ. This represents the NASDAQ 100, an important index in our market. It includes the top 100 non-financial companies by market capitalization in the NASDAQ 100, including companies like Apple, Amazon, NVIDIA, Tesla, that whole group. Now, when I captured this chart today, the QQQ, if you can see down here with me, was trading at $366.78, about 11% below the all-time highs of November 21st, all-time highs of November 2021 at 408.71. Now, we all know that we enjoyed the NASDAQ 100, the Qs enjoyed a really nice uptrend this year. And from the January lows at 262 to the July relative high up here at 388. So from there, the QQQ from this high, it fell down to August 18th, just like the SPY, and fell to, I'm looking for the number here, it fell to 354 right here on August 18th. Then it rallied up to September 1st to 381. Then it gradually slid down here to 351 right here on September 27th. Then consolidated for a couple of weeks, week and a half, at the 353, 354 level. Now, on October 6th, we saw the same kind of positive day that we saw on the SPY that day. Many times these two charts will have a lot of similarities. So we saw the same positive candle that we had a week ago, Friday, on the SPY. And at that point, the Qs, the rest of this past week, climbed to 374 on Thursday, then started falling today. Again, now we're at $366.78. So if you look at this and back up a little bit, and you know I'm a big fan of looking at the bigger picture, I can see where there's possibly a triangle. It's not a dramatic one, but there's a triangle forming here. If you can see, I can put a trend line, a channel line above these highs, these pivot highs here on this chart, and then we can run another trend line down below these lows, 350, 351, that zone right here. So it's forming a very kind of a soft triangle because price has been making lower highs as it's been moving through August, September, October, lower highs. The lower level has stayed it's kind of lower, but not as dramatic as this line up here. So this 368 level here, where this high came up, this pivot high, we need that we need to be able to break that hopefully sometime here during earnings season. But the key support line here is 350, 351, and that definitely needs to hold. So on that note, let's go on to our final chart for the day. Okay, yes, I'm getting defensive here. We're looking at a daily chart of the Consumer Staples Select Sector Spider ETF, the XLP. Now, we all know that this year AI stocks and energy stocks have really run the market and been everybody's favorite. And whenever that happens, usually staples suffer as people think they're not exciting and fun, which can sometimes be true. So we're looking again at the XLP, a daily chart. It has 38 holdings. Top holdings include Procter & Gamble, Costco, Walmart, PepsiCo, and Philip Morris. Now, when I captured this chart today, the XLP was down here trading at $66.73. Now, it made an all-time high, and you can't see it here. It made an all-time high of 81.34 a couple of years ago in 2002. But if we look at this chart right now as we are, this daily chart, the last two highs came in here at May 1st at 77.82. Then it dropped to $72 in June. Then it moved up to $76 in July. Then it fell back down below the 20-day, the 50-day, and the 200-day moving average down to October 6 lows here to $65.18. So it's gone from that high last year of 81.34 and then gradually made lower highs again as AI and stocks like that have become so much more popular. Now, however, staples are starting to look pretty. If you listen to CNBC, you'll know that, and they certainly do to me, as long as everything goes my way if I make this trade. So if in the coming week, the XLP, if in the coming week the market becomes relatively positive, and if the XLP can stay above 65, and that is the low of this day here. It fell on October 6th to $65.18 intraday. It popped right back up, and you can see there's a tremendous amount of volume coming into it on that day. So that's kind of an important thing to note here. But it did fall intraday to $65.18. Then it bounced back up, and you can see here that it was starting to rally a bit this week. Also, this same level of 65 was held in October of 2022. So that's very important. However, I'm not going to grant it much grace. If in the coming week, the market stays relatively positive and the XLP can stay above 65, I may add a small position to my trading portfolio, and my stop is going to be set at 64.80 down here. If and when the XLP moves above 68, and that's this pivot high here, and stays above it for 3 trading days, I will add to my position, and of course by then my stop will be a trailing stop. So that's what I'm looking at here. You may want to keep an eye on the XLP in the coming week. Now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. And if you'd like to learn how to swing trade, this is a very popular program, how to swing trade successfully, how to trade the trend, again, always one of my favorite, how to read charts, great for novices, 3 winning setups, really good for short-term traders, And in the case of what we're doing with the XLP now, how to bottom fish like a pro, check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen or simply click on the orange button below. Until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.